Hi guys, hi everyone. Good morning, good afternoon, good evening, wherever you are. Welcome to Vantage webinars. How are you guys doing? Okay, so what do you think about gold? Do you think that we're gonna buy today? You're gonna look for the buy entry or you're gonna look for the sell entry for gold? What do you think? Okay, because today we're going to talk about price action masterclass. So a lot of instruments, especially gold or others currency pairs, if you price at the key level, such as support and resistance or demand and supply, you will see that there's so many price action. Okay, they will show you that they're going to reverse from this level. Okay, I saw there's one, okay, which is yesterday around 3654 for gold. You'll see the price action, so you can sell, even though we know that gold on uptrend is bullish, right? But the certain level we can sell with price action plus maybe other indicators such as Fibonacci extension or other like divergence. So yesterday you can sell gold at 3657 or 58. And then last night, I mean my time was last night, but yesterday, okay, gold had risen to 3674 at the zone. They're gonna be Fibonacci confluence. Then we can sell at the zone. And okay, while we are still waiting for you guys to tune in, just have a quick look on XAUSD yesterday. Okay, gold has closing with price action here, right? So what do you think? I'm gonna look for the sell entry right there. Okay, but gold has falling from the zone, which is somehow this level. This is my first sell zone. It's about 70 pip. Okay, from 47 to 40, let's just say 60 pip. Now it's rising. So I think I'm gonna wait for the sell entry. If I go to this level, 3659, okay, I'm gonna sell. Today I'm gonna look for the sell entry gold because of the price action. Okay. I know it's risky. Okay. Also in H4, we see that gold has made the bearish OB here. There's OB here. So we're gonna wait for price to pull back to the zone. We're gonna sell. This is us first sell zone at 36.46. I already sell. Now price rising again. I'm not gonna sell here. I think they're gonna go to the OB. Okay, and then you can have another sell entry at 3659, something around the zones. Okay, very strong buying. Okay, right now, anybody buy from this 3620, 23, there will be somebody buy here. They have the confirmation why you buy at these zones. Okay, I spot that confirmation. Okay, nice to see you guys here. Any one of you guys the first time joining my webinars, guys? I saw family names here. Some of you guys, I saw that you might follow me from others. I know your name here. Any one of you guys joined the first time? Or first time joining my webinar? Okay, let me. Okay. Okay, so I think one of you guys already here. Anyone is first time seeing me? You can just, raise your hands, or you can just give me a thumbs up. Anyone a first time joining? Oh, okay. First time joining or the first time you're seeing me doing the Vantage webinars? Hi everyone. Nice to see you. Okay. The first time. Okay. Nice. Anyway, it's okay. Okay, because for the Vantage webinars, right? I will be doing like 2 days per week. So every Monday, I'm going to do the kind of live trading section. So if you have time on Monday, you can join my live trading. And Tuesday, which is yesterday, covered by Crescenda. So she will also giving the webinar. And every Wednesday, I will be doing the webinar as well. So for the Vantage market, we have 3 days per week. Okay, any day you're free, just come and join us. All right. Okay, so before I start the webinar, first disclaimer. All right, everything in this video is purely educational in nature. Okay, nothing should be considered as investment recommendation, any kind of advices. Okay, and risk warning: trading forex and CFD carries significant risk and is not suitable for all investors. So please do your own due diligence before you guide trade. Okay. And introducing your host today is about myself. My name is Peggy. I'm an investment analyst and a prop trader or proprietary trader. So I'm working with Everest Frozen Group. Now we have renamed at the Rocket. So we finalists for the best equity result in 2019 to 2021 and finalists for the best equity result in 2020 and 2021. So basically what we do a quick like just keep it short. We do some deep research. We provide those like technical analysis. We also do the fundamental. Okay, and my daily routine, I just look for the setup and then find those like high probability trade setup, and then doing the webinars. Okay. I also do a prop firm. I think a prop firm or proprietary firm. I think you have heard about that. So basically, if you pass their challenge, okay, they will give you the fund to manage. Of course, you need to follow their rules. Okay. So as a trader, I will earn the money from the profit that I make for the fund. The profit split could be like 80-20 or 75-20, depend on the prop firm. Okay, provided you have passed their challenge. Okay, and this is the agenda for today. So basically, we're going to cover what is price action in trading, core principle of price action, key price action strategy, multi-time frame analysis. If you are following my live trading, you will know that I do multi-time frame analysis from D1, look for the key level, and I highlight the key level. No, D1, I want to look for the direction, whether like D1 candle closing with either bearish or bullish, it is at the support or resistance in D1 time frame. And then I will go down to H4 or H1, usually will be H4, to look for the key level, but my entry is going to be at M5 or M15. I consider myself a day trader. So basically, I don't hold my position overnight. Okay, usually I will just close my entry or my position within a day. That's why I look at the H4. But if you are a swing trader, position trader, which is you hold the position more than one day or a week or maybe a few days, and then you might have to look for the key level on the higher time frame, and then you use H1 or H4 for your entry. Okay, so it's up to you, but I consider myself a day trade. Okay, I can't hold my position overnight because even though I have set my stop loss and take profit, my position is still running. Okay, I move my stop loss to break even, but I cannot have a peace in mind to like always think that whether my position is gonna hit my TP or gonna hit my stop loss. So I just close everything. Okay, even though I floating loss or whatever, unless I have very good position. Let's say I short go, for example, on the top, and then I might hold for the next day. Okay, so it depends, but 98% I will close my position within the day. Okay, so let's move on. You guys can see my screen, right? Okay, so let's just first of all, let's just look at anatomy of a candle. By now, you should already know how to read the candlestick. Okay, so for the bullish, opening is below, closing is on top. Okay, the highest price, meaning that whenever you see the bullish candle, okay, the buyer control the market, right? You see that the buyer push open the price here, push the price all the way up here, and maybe come down here the lower price and closing above. For the bearish seller, okay, control the market, opening here, put the price all the way down and push the price up and closing where below. Okay, so by now you should already know how to read the candle. Okay. Whenever, if you ask me, is it important to remember those like price action, okay, to like remember all the name? To me, no, that is not necessary. If you just can remember or memorize all the picture, that is okay. Or if you just read that, whenever you see the long wick from for example, I can't remember the name of them, but I just remember the picture. Whenever you see the long wick and the body closing somewhere around here, we already know that seller is control the market because they push the price all the way down, right? Okay, that we know. Whenever you see the body close, I mean, you see the body close less than 50%, then you know that either buyer or seller is control the markets already. That doesn't necessary that you need to remember all the names. Okay. Now, what is price action in trading? We have, of course, we have reversal and we have breakout. Okay. But price action in trading, they will say that the price action trading is approach based purely on analyzing news price movements and the pattern on the chart without heavily relies on indicator. So basically no indicator at all, but I use RSI. Okay, if you follow me, I'm using RSI for my indicator to look for the overbought and oversold. Decisions are made by studying candlestick behavior, support and resistance. If you see the PA or price action at those area and the market structure based on psychological reaction of the market participant, meaning that whenever price is at the key level, you will see the rejection. You will see those price action. Okay, I will show you later. For the core principle of price action, they will say that they are focused on price tell the story. Price is ultimate reflection of all market information and sentiment. Okay, key principles include analysis of support and resistance, zone where price tend to pause or reverse, recognizing chart pattern, reversal or continuation formation, understanding trend structures. Higher high, higher low is on uptrend, lower low, lower high on downtrend or bearish. Okay, emphasizing risk management and discipline, using stop loss and consistent strategy. Okay, so let me bring you guys to the chart. Where's my chart? Here. Whenever, okay, we identify the support and resistance, and of course, the candlestick, we're going to use the Japanese, right? It's called Japanese candlestick. Some of you got use light chart, some of you got use that kind of that candle. I'm not using this. More popular, we're going to use a Japanese candlestick, right? Okay. Whenever you want to look on a higher time frame, okay, here, of course, if we're going to look at even a H4, we will know that price had very strong bullish move, right? Here. If we're going to look at market structure, by now you guys should already know how to identify, right? Higher high, higher low, higher high. We know that it's on uptrend. Okay, uptrend. But yesterday, like I just mentioned, I saw price closing with price action. This is my price action. What is this price action? Should be hammer. The long wick. Whenever I see whenever we see the long wick like that, meaning the seller is in the market, right? They opening here, closing below, is a long wick. Seller is in the market. you see the below, there's no wick at all, meaning that no buyer, no one want to buy at this level. You zoom in to see. Have very small wick, which is the order that push the price down, to here at 3626, and then they're closing at 3626 also. You can see that, meaning that there's no one or investor want to buy from this level. Everybody keeps selling somewhere from this level. So yesterday price closing with price action. So today we're gonna look for the sell entry, right? But where you gonna look for the sell entry? And the why price has fallen from this zone. So remember that if you attend the webinar, you're gonna use what? You're gonna use Fibonacci extension whenever price has broken the recent high or the previous high here. You're gonna use Fibonacci extension, or you're gonna use Fibonacci projection to find the zone for you to sell. Okay, meaning that, okay, that is the zone. For example, I'm gonna use Fibonacci extension, meaning that I would say that could be my next resistance level. Okay. Then you're gonna use the Fibonacci projection. So that's what my zones that I'm gonna sell, at least here, right? At this zone. This was the zone, okay? Yesterday, 3661, but you also need to go to this level. What the zone? Zoom. You don't get confused. Where is my zone? So my zone was here. Okay, from projection, and I have another projection 216. Okay, so that's going to be the zone. So now, whenever you see price has made a all-time high or new all-time high here, we're gonna sell here yesterday at, let's just say 3674. What you need to do, if you go down and look for the price action, you will see that yesterday price closing with bearish engulfing candle at the zone. You can see that here. You can see the price action closing with bearish within the zone, exact 3674. Sometimes you can go to even M1 to look for the price action. Do you see the price action? Yes. Lovely, which is here. This is your price action. Sometimes you can even go down to the lower time frame. I know that a lot of the little trader or investor, we gonna sell at 3675. Anything that ending with 5 or ending with 0, psychological number, we're gonna sell, right? But price did not go up to 3675. Maybe they saw a lot of pending order at the level, so they just reverse. Okay, so meaning that if you put the pending order exact 3675, and then maybe you wake up, you'll see, oh, you miss. Why price did not trigger your entry, right? And after that, you can see falling and continue to fall here. Okay, like yesterday here. Okay, so already support resistance. Okay, so whenever, let's say back here again, meaning that I'm gonna say that this is my first resistance within the Fibonacci line up closing. That's gonna be my zones, right? This is my first resistance. Whenever price go to the resistance level or to the ceiling, you will see that kind of like stop and pausing over there. Like I just show you guys that you will see the price action here, so you sell. Okay, then you will ask me, so where is my stop loss? Because if you're gonna sell, like we trade against the trend, you can have really tight stop loss. Whenever you see the rejection, either you want to put a stop loss like 3678 or 3660, 81 or 82, up to you, because depend on your lot size, depend on your account size. So you can't really have the fixed stop loss. Remember, you can't really have a fixed stop loss. Why? Why you can't have fixed stop loss? Because you need to look for the next key resistance. For example, you're gonna sell here. I know that I'm selling here, it will be risky, but I saw the price action. There is Fibonacci zones, there is a psychological number. I'm gonna sell here my stop loss. I'm gonna put above 3685. Could be 3686, 87, depend on your account size. I always say that because a lot of you guys, whoever follow my live trading, okay, they'll ask me, so where is stop loss, where it take profit? I don't have fixed stop loss for you guys because let's say if I have my lot size, for example, I have 10 lot from 3674. I put here, maybe my stop loss maybe just 20 pip above, meaning that my stop loss will be 3676. Meaning if a 10 lot price hits my stop loss, I lose 2K. But if you only trade with, let's say 0.1, meaning that you can put the stop loss maybe 100 pip. So if price hit your stop loss, you lose how much? You lose $200. Maybe for yourself you are okay. So whenever you follow those like social media or any live trading session, okay, try to manage your risk, try to manage your lot size according to your capital, according to your accounts. Don't ask me or don't ask people where is the stop loss. 30 pip or 40 pip. I can't really tell you that. You get what I mean? Because my entry and your entry would be different. If I tell you 30 pip here, for example, 30 pip here, maybe my stop loss, my entry at 74, for example, okay, and then you enter at 3672, meaning that if price rising 30 pip here, you hit stop loss, but I haven't hit my stop loss. You get what I mean? Yeah. Okay. Oops. Okay, continue. So another one, I will show you price action yesterday. Okay, yesterday H1 time frame you sell. Okay, you will see the price action here. This is yesterday I caught a sale here. Okay, price all the way here. I have two confirmation. One, I saw price action. Second one, I saw the divergence is here. And the first one, I had the extension 161.8. So yesterday I quite confident I say because I have three confirmation. I have price has reached 161.8. Secondly, I spot the divergence in H1. And the third one, I spot the price action in H1 time frame, which is whenever price H1 close, right? You can see that you can open at the T655 and then price is falling, which is yesterday I was looking at, okay, I have three confirmations, so I short. And if price can close below 3644, I will consider that might be changing of the market structure, right? Because you can see that from here, price still make the higher high, higher low, higher high. From here, if they can close below, either gonna pull back and may continue to go down, but price did not close below. They continue to make a higher high, higher low, and continue to go higher. Okay. Meaning that whenever you sell here, let's say you sell here, doesn't mean you sell and then you want to hold until like go all the way to 3,600. You need to monitor level by level. If price could break here, it's gonna be another demand zone or bullish OB here. So either price can close, this is gonna be my target, then we're gonna be a pullback here and then continue. Okay, but since they did not close below 36.45, and then we not consider it a chain market structure shift. Okay. And key price action strategies. Okay, you need to find, for example, you see support resistance trading. Buy near support and sell near resistance. Always say that buy low, sell high. buy low, sell high, buy low, sell high, but that is not so easy because a lot of us or a lot of you guys still struggling where to identify the key level, meaning where is support and where is the resistance. If you identify the key level correctly, whenever price is touching at the level or approaching, in the lower time frame, you will see your price action. You will see your price action, which is telling you that, hey guys, I'm going to fall from this level or I'm going to bounce from this level. Okay. Or you can trade breakout. Based on goal in D1 last week, if you trade breakout, your cost the buy for XUSD is here. Okay. Let's say here. Okay. I will go to D1. This is your trend line, correct? This is your trend line. Okay, this is your trend line, bearish. Whenever price is break above, this is a breakout. I did not play with the breakout. I wait for price to pull back. And you can see that whenever here is our resistance level, price close above, right? Price close above, if you want to highlight the zone, this is going to be the zones. This is a resistance level. On August 28th, price is close above my resistance level. So the next day, price had pulled back from the support, from the resistance, it becomes your support. So you will get the buy at this level. Here. Some of you guys don't even look at the D1 time frame, right? You see that here we have breakout trend line, pull back on August 29, Friday, and after continue to go bullish. You can see that all the way to go bullish. Okay, you will see that. So this is a breakout. Okay, anyone buy here at 3,405, something around that, and they even break above the all-time high 3,005, right? You can see that. You can see the body is close above. Here, price falling. Either we're gonna say that that is your FVG here. Fair value gap. Price went in on September 4, went in the FVG and then continued to go rise. Okay, continue to go bullish. Okay, and then I will say that trend following, identify the trend and rise, clean move after the pullback, right? Especially gold, you will see that it's very clean move. You see the pullback at where just now, FVG or fair value gap. Not during the choppy price swing. So whenever you see we have a clear trend and then you saw like FVG, OB, you wait for price to pull back and then you buy. Okay. Candlestick pattern, use pattern like a pin bar, engulfing candle or doji to anticipate reversal or continuations. So engulfing candle, smart money concept or ICT, they will say that OB or order block. Okay, whenever you see the I'm gonna open my chart. Whenever you see bearish engulfing candle or bullish engulfing candle, smart money concept or SMC, they will call this one as what? Bullish OB. Meaning that whenever price went in the OB, you're gonna buy, which is okay. Not 100% OB gonna work out. Not every OB or order block gonna work out. Okay, that is a bullish OB. This is the bearish OB. Or this is a bearish engulfing candle. You will identify this as your bearish OB. Correct? Price had a rejection. Okay, but which I just mentioned, not every OB or order block gonna work out. this is a good example, so that's why I always use this one, okay, which is here, because this happened not so long ago here. We would identify this one as our bearish engulfing candle, and then we say that that is a bearish OB, correct? Price has broken. Price did not respect this bearish OB. It's broken. So for the smart money, this one gonna call your breaker box. Price went in the box, you buy. Okay, from this zone, it says a lot of trader might get a stop out at this zone if you put a pending order, because this zone we will identify at our resistance level. Okay, and you can see aligned with our OB. Price break above. From this one, whenever there's a fail OB, there's gonna be breaker box. So whenever price come to the box, you're gonna buy, right? And then you can see that from the resistance, it become your support level. Some of the trader they will call this one at the flip zone. I believe you guys heard about flip zone, meaning that support it become the resistance, or resistance become the support. That's called a flip zone. Okay, this is more breaker box. Okay, you can see that. So this is a fail OB. So doesn't mean 100% OB gonna work out. This is a good example for you guys. Okay. Okay, pin bar, doji, reversal or continue. Another one is like reversal pattern, spot head and shoulder, double top, double bottom, and a major level to catch the trend changes. Can we see it in gold? Yes. Oh, let me remove the drawing. Okay, based in gold on D1 time frame, I would say that this is my double bottom, or you can say this W pattern, right? Boom, continue. Okay, you see here, right? It looks like W pattern. This is the double bottom. You will see that the chart pattern. This is our price action happen where at the key level, which is this is the support or demand or OB, whatever you want to call. Okay, this is the zones. The wick you might identify until here. Okay. This is inverted hammer. Okay, this inverted hammer. Another one you can see there's a lot of price action. It's here. This is also double bottom, right? Continue. You can see that. Do you see? This is a support level, right? Then you can see the price action here. So you're gonna buy for gold, right? This was in 2023 during the COVID one. Okay, and we go to H4. I'm gonna have a quick look here. Here. Okay. Let's say I would say that this is my resistance level. That is the zones. Okay, let's say that is a zone. So we will consider this an M pattern, correct? This is an M pattern. Boom. And then if you, let's say you sell here, and it seems like price rising to 1702 from 1683. If you were to look here, you might say, oh, if this is from the resistance, it becomes the support, right? But no. Don't forget about the divergence. If you were to look at the where, look where. If you look from either from this whole high or from this, you will see that there's a bearish divergence in here. But for very smaller, closest one, I will look from this high to this high. You will see the divergence here, meaning that if you did not trade with the divergence, we're gonna miss out a lot of good entry. Meaning that this is called what? Stop hunt. or fake breakout. Okay, this is called fake breakout. Okay, doesn't mean like price go and then gonna hit the stop loss, or maybe hit the stop loss already. For example, you have really tight stop loss here, and price rising after they see price still falling. Follow the always spot the divergence. I'm using the only RSI to spot the divergence. Okay, that is example. And another one, I'm gonna show you. And then the people say, no, I'm not gonna trade with the chart pattern because I attend the SMC Smart Money Concept or ICT. They will say that those at chart pattern, higher high, equal low, trend line, that is liquidity for the smart money. Yes, but not all of them. Okay, if you know how to spot, if you know how to trade with support resistance, trend line, chart pattern, you still can continue to do that. Doesn't mean if you attend the SMC, which I also given, those are SMC Smart Money Concept and ICT, and then I will say that okay, those liquidity where trend line, head and shoulder, or maybe the chart pattern, that the liquidity for the smart money. Yes, but usually you're gonna get stop out, or you get a you're gonna get like stop hunting, or those like fake breakout, or get like get like your stop loss get hit at the resistance level, meaning that you did not look for the next or whatever is above your key resistance. For example, I personally also trade with support resistance. Okay, but you need to know how to look. For example, here, I have a good example like right here, maybe. Okay, here. This is used to be our support, become the resistance, pull back, support level, resistance. From this, I might to adjust the level because this is too far away. Price is in the past not relevant. I will pick here. Support level, break below, become our resistance. From here, I'm gonna sell. Definitely, we're gonna cut the sell here. Price closing with belly end gap, pull back to the box, you're gonna sell. Okay, and after that, if you come back, if you still that price went back in again, you get stop out. If you sell here, you get stop out. Okay, you will get stop out. But why? I'm gonna look somewhere around here. One, either okay, sell here. Second one, close above the body. There might be a zone if we're gonna continue here. Okay, but I'm not interested. When I go in here, let's say, okay, you sell here, price falling. Then you need to know, oh, how come it's falling like this? Maybe from here, 3357 to 3328, you already closed. This is a H4 time frame, more than 100 pip. Okay, and if you want to continue to sell again, no, you get stop out, right? Because this one is their liquidity. They look at this FVG or fabric gap right here, meaning that whenever you trade with support resistance, you sell for the first time. Second time, price went back to the resistance or support level, and then you need to tell yourself, are you okay to sell at this level? Okay, or whatever, if I sell here, any area that above the resistance level, and then you will say, okay, this is the FVG or fabric gap. Above the FVG, I spot it, either you call it is your supply zone. Okay, let's say you identify your FVG price touching, for example, touching you sell, that is okay. You sell in again here. Let's say you sell in again here. I have two confirmation. I can tell myself, okay, I'm gonna sell here because I have an FVG here. I spot the divergence as well, which is there is a bearish divergence here versus my. You can't see, you can double click and make it bigger. That is my bearish divergence. So I have two confirmation. What if, okay, I will go down to the lower time frame. I want to see if there is any price action. Okay, lovely. Okay, what do you see? I saw the price action at my FVG. I have a big smile, right? You see that my price action here. So my M5 price action. What about M15? This is another price action. This is called twister top. Twister top. Yes, meaning that the opening and the closing almost the same price, almost the same level. Okay, here, you want to read the candle, what do you think? The buyer opening price here, closing here, at this zone within our FVG or fabric gap, the seller, the seller puts the price down. Opening here, meaning that closing here for the bullish, opening here for the bearish candle, right here. Here, that's price, for example, right? Almost the same price, meaning that I'm not interested, even though it's a bullish move, price closing at, let's just say 3364. I'm not interested to buy at 3364. I'm gonna sell. That's why the next candle opening is right here, closing is here. Okay, and why? Maybe the reason price too high. Another one, people say, okay, I spot the FVG here, fair value gap somewhere around here, so I'm not gonna sell. Another one, you might think that, okay, is this any Fibonacci line up somewhere around here? So I could pull the Fibo. Okay, within my FVG, lovely, within my 78.6% Fibonacci retracement, I'm gonna sell. Okay, if price break above my swing high, I'm gonna use Fibonacci extension. Lovely, within the zone, I have my 127 Fibonacci extension. So the zone. So this is going to be my sell zone. I have FVG, I have 78.6% Fibonacci retracement, I have Fibonacci extension within the zone, so I'm going to sell. I have the divergence here. In M5, I saw the price action, so I'm going to sell. Okay? Any question? I pause here for a while. Okay, I think I talk non-stop. Any question? Pause here for a while, guys. Okay, next slide. Okay, multi-time frame analysis. By now, I think you should already know that I analyze or I do my trade setup on higher time frame to lower time frame. Oof, where am I? Okay, here. So start from higher time frames, like daily, weekly, to determine the overall trend and market context. Mark major support resistance zone on a higher chart, then drop to lower time frame like H1, M15 for the entry, always like that. Okay, look for signal confluence. I have like two, I didn't have to be two. If I saw like more than two, I'm really confident. Okay, when setup align on multi time frame, probability is high. It's higher or it's high. Okay. Now, the last slide, I'm going to talking about trade management. So always, always define stop loss based on the current price structure. Risk could be 1 to 2% risk per trade. Okay, this one have to be. I'm quite flexible. I'm not really stick to risk per trade 1 to 2%. Okay, to me, it is flexible if you can control the risk, or if you think that okay, what I want to say, like sometimes I would risk more than 3%, sometimes I risk more than 3%, depend on where is my entry. Okay, I'm not really strict on my risk per trade gonna be 1, but if you trade with a prop firm, like proprietary firm, they will have a risk per trade 1% or 2%, or sometimes you can't lose more than 3%, even though they will say that, okay, daily drawdown would be 5% per day, but they will have really strict, okay, risk per trade 1% or 2% only. But to me, sometimes I risk more than 3%, depend. Okay, not all the time. Okay, set clear target using next major support and resistance, or attribute risk and reward ratio. How many? Should be 1 to 1. If you want to be a professional trader, it's at least 1-to-1, but doesn't mean if you're a scalper, okay, and okay, if you're a scalper, you can't measure your the success based on the risk and reward. Usually they will look for the win rate, meaning that scalping, you know that scalping we in and out per day, like really often. If the scalping goal, we aim for maybe 30 to 40 pip or 50 pip, even like 20 or 30 pip you close. So the strategy for scalping must give you the win rate more than 85 to 90%. That's gonna work out that strategy for you, because you can't measure the strategy based on the win rate, based on the risk and reward, unless if you are day trade, okay, you trade with those like currency pair or maybe gold, and then you can set 1-to-1 if you enter on a higher time frame. If you just scalping gold on M15, you're gonna tell me, okay, I'm gonna aim for risk and reward 1-to-1. You can, but usually scalping we can't, right? We only look for the win rate, not risk and reward. So that is totally different. Okay. Continuously monitor for changes in price action and adjust or exit if markets changes. So whenever, let's say I put my stop my SL, my entry here for sale, for example, and then my take profit here. If I sell here, price is rising. This is my key level, and I saw that it seemed like price is going to break. It's already break or close above. Usually, if I see, I just cut loss, meaning I just close. I don't wait for price to hit my stop loss. Let's say hit my stop loss, I lose 1K. If I cut now, I will lose 500. I'll just close at 500. Okay, because either news come out or there's I see already price has closed above the resistance level, meaning that this resistance the market is not interested, they will go to the next resistance. So I just cut loss at 500. Why? Compare always you think about, like, if hit stop loss, you have like lost 1,000. If I cut loss now, I will lose $500. To me, $500 is easy for you to get it back compared to 1,000. Okay, let's say if today or hit the stop loss, lose 1,000, you will say, oh, 1,000, maybe I have to take like 2 to 3 days to get it back, or maybe like 1 week. But instead, if I cut now 500, maybe I can make like 1 day or 2 days, I can earn it back, depend on, account size, right? That's why they say trading psychology is also very, very important. I always share with my fellow that, or my community, that you should have a self-talk. Okay, end of the day, if you never done that before, if you do that for the first time, you feel very awkward. You will still like talk to yourself like in front of the mirror, you feel like a bit funny. But if you keep practicing, it will make you feel better. Like, why I hit a stop loss today, for example, why is stop loss on? Then you will say, oh, is it because you did not discipline, you did not wait until the price go to the level, you know that you're gonna wait here. For example, you have very nice trade set up, I'm gonna sell here, okay, but you have a FOMO. Price have reached your level, price at here, maybe you see a little rejection here, then you sell. Price rising to the zone, your burn account, or you need to cut loss, or you lost 2K, for example. Then you have to talk to the why today I hit stop loss. Oh, because I did not discipline. I have very good setup, but I did not follow my setup plan. Second, what you learn from this mistake? Then you need to ask yourself what you learn from this mistake. So next time, be disciplined. Okay, I will just have to wait. Okay, and then what you need to do, you should have the trading journal, like, I have the book, and I just write everything, like what I have done today for about trading. If the market give you the money, let's say today you earn like $100, $200, what you need to do, you need to appreciate, you need to say thank you to the market, you need to say thank you to the money, because money will stay with the person who appreciate them, right? Same, like you have the what? You have the partner, you have your wife, girlfriend, boyfriend, husband, whatever. If you show appreciation, they're gonna be like very, happy, very thankful. So every time you earn some money from the Forex, just say thank you. Even $1, okay, or even $5, even 10 cents, that is still money, okay? Why? If you are a full-time trader, let's say you full-time, if you are a part-time trader, if you're working full-time, in order for us to just earn additional $1 or $2, what you need to do, you need to work overtime, right? Then you get overpay, OT, right? But whenever you know Forex, if you have the knowledge, okay, trust me, $50 per day, $50 per day, that is achievable. $100 per day also possible for all of us, provided you have the knowledge, provided you have a capital, okay? And if you don't have the capital, you only say that, okay, can I trade on $100 account? You can, but you need to be very, very, very disciplined. Comparing your trade $100 compared to 1K account, 1K account is easy for you to get $50 per day. It's proven, okay? But if you have $100 per day and then you have $100 account, you want to earn $50 per day by scalping. If you ask me, can I do that? Can you do that? You can, but meaning that you already like be expert, you already know where your entry, when you exit. Because $100 per day, to me, $10 per day, that is achievable, that is possible. If $50 is more a bit overtrade or gambling already. Okay, so if you have $100, you can, but you can save until you have 500, and then you trade on the real account better. Okay. Any question, guys? That should be all today for the price action. Trust me, price action is very, 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 very helpful. Okay, and I know that you might be wondering what strategy I'm using. Simple, support resistance. I go down to the lower time frame to look for the confirmation. My confirmation I always share with you guys. I don't have any 3K strategy. My setup is very simple. My confirmation would be what? Price action, chart pattern, divergence, very, very important. Divergence have to happen at the key level. And if I see market structure shift, meaning that chain of market structure shift, meaning that price make a higher high, right? You attend the webinar, price on uptrend make a higher high, higher low, higher high, higher low, and then they break the previous low here. Then I know that if over here on top here I saw my price action, I'm gonna sell. Then I might target to maybe the next support level. If price close below this level, usually I will close this sell entry, because usually price gonna pull back and gonna sell again. So I'm gonna have the sell entry right here. I'm not gonna hold my entry from here, price falling. Let's say I sell here, price falling, let's just say like 1,000. I see my balance is floating profit 1,000. I saw price break here. I know price gonna pull back here. And then from 1,000, I'm not gonna sit down and look price pull back from 1,000. Now it become 100. And then after that, I'm gonna sell here, and price might continue to fall here. Usually, I will take 1,000 first. If price pull back here, I'm gonna sell again. Okay, but if price keep falling, that is okay, because in the forex market, anything is possible unless I close half here. I put my stop loss to my break even, maybe somewhere around here. Let's say if I sell here one lot, price falling, they might pull back, I might close 0.5, right? And then I hold. If price falling, from here I would have earned. Why? Because if you see your account, you're like floating in profit, you just see you can't touch. That is not your real money. You need to withdraw. right? Even though you saw the money, you see the money on your account, not your money yet until you withdraw, and then you can touch it. That is your money, and you use that and spend. Okay, I don't like to grow my account. Okay, let's say if I have my account like $1,000, I aim for $100. Maybe 5 days I make a profit 300 or 500, I will withdraw. Then I will just remain at 1,000. Why? Because if you grow your account, starting you very disciplined with 1K, you really disciplined. I just want to I just want to get like $100. You really disciplined. Whenever, and then your lot size should be 0.1. For example, your trade goal. Whenever your account is growing to 2K to 3K, what do? You start to lose yourself. You start to lose who you are at the beginning. Okay, why? Whenever your account is go 3K, your lot size is not at 0.1. Your lot size gonna be 0.5, maybe even one lot. And you start to lose yourself. You start to like forget that the reason why you want to, I mean, you forgot like what is the reason why you want to trade forex. To me, I want to have additional income. Second, I want to have the better life. Like a lot of us, have the better life because of the forex. If you know how to trade, right? So let's say back to 3K. From 0.1, you really disciplined. You have been disciplined like for the 1 month or 2 months. Then after that, your account keep going. Your lot size gonna be 0.5, 1K. What do? End up, you will just burn your account. You withdraw the profit, you deposit again. What you need to do, you should have 2 accounts, okay? Nothing wrong if you want to trade on the 5K account, 10 account, you can. If you know how to manage your small account, which is 1K. If you have constantly be disciplined, you can manage, right? Whatever the profit you make from 1K account, you should have open another one account, right? The profit you transfer to your another account, and then you keep it there. Whenever 1K, 2K, and then okay, you tell yourself, okay, I'm ready to start with 5K account, and then you start with 5K account. From 5, you don't go like, okay, 1,000 become to 1,002, 1,003. No, $200 from 1K account you transfer to another account, to the same broker. You can do that, right? Usually I will do that. Okay, I don't withdraw, I just put here, because sometimes I might have a margin call sometime, right? So margin call, I just transfer from this account to this account. Okay, sometimes I have that. Doesn't mean I don't have margin call. Sometimes I have that. I'm not a god, okay? I also did that, but I still can manage my risk. I still can survive in the forex market. Sometimes, okay, whenever you got 1K here, okay, and after that 2K grow, you still trade on 1K. Within 1 month, let's say within 1 month, if you stay disciplined with $100 per day, 1 month you have earned $2,000, and then maybe the next month you say, okay, I think I'm gonna start with 3K this month. I'm okay with that. Okay, I discipline. Okay, I quite confident my trade setup. I have been constantly make a profit. I know what is my stop loss and take profit. I know how to cut loss, and then you can start. You imagine that every day just earn for $100, right? $100. 1 month is already 2K, because we trade 20 days per month. Okay, 2 months is already make another 2K, which is already 4K. For the third month, you already have 5K because you have 1K here, right? Your profit is 2K. So the third month you can start with 5K. That is possible, guys. That is really possible. Nothing impossible. It's just that we are human. They say that easy say than done. Yes, I agree with you, because we have agreed, right? Whenever we earn $50, I have that. You earn $50, you earn $100. I think, oh, never mind. I think I can earn more. It's okay if I just use my profit to trade. Then today, let's say I'm gonna finish off soon. Let's say I already earned $100 during the London session. I feel like today I feel like lucky. And then maybe during the New York session, I went in and trade. And I said, oh, it's okay. I will use $100 to trade because of my profit. Then after that, you lose. Then you're gonna have said, it's okay, I lose because I lose the profit. My capital is still there. That is a wrong mindset. Ending, you lose. Ending, you lose. Other than you lose all your capital. Okay. I have that last Friday. Okay, last Friday. I greedy. Okay. I lose my profit for the not for the entire month, but I lose part of the profit that I have been earning in last month. Okay, then at the end of the day, I feel quite upset about myself. Then I have a self talk because I know the reason because I feel greedy. I did not discipline. Ending, that is the result. I lose my money, but not all, just the profit. Okay, last question before I end today. I hope you guys learning something, also learning from my mistake as well. Last question. Oh, okay, last question. Anyone? If not, I'm gonna have a quick um highlight or a key setup. Oh, okay. Price has gone down to my level. This is my zone, right? This for my resistance level. I'm gonna wait for price to pull to my premium discount, which is somewhere here. Price go to my 50% here and then falling, high risk, because if you sell here, you can sell. Okay, another sell zone is going to be at this level. That's going to be how many percent? Slightly above 50. Okay, but this is going to be the zone that you can sell from this to this, which is price went in 50% fib and then falling from 48 to 43 is about 50 pip. This is the zone. So you will say, hey, Peggy, you give me, that's a big zone. So what you need to do, then you need to wait for price to go in the zone, wait for confirmation such as price action, divergence, whatsoever there. And you also highlight, okay, there is another zone here for the OB in the M15. So I'm sell here. Already, I have a sell here already, but I did not overtrade. I sell here, but if price go in somewhere around here, I will have another second gonna have another sale second sale somewhere around here. Okay, and I think if you were to reach the M15, right, it was sideways. You can see that all the body is close below 36.47. The body is close below, right? So sell. Stop loss. If you enter here 48 and have really bigger lot size, my stop loss should be just above 3650. And now price falling. Okay. Why? Because one is price closing with price action. Secondly, if you were to look at market structures, I want to see like higher high, higher low, higher high, higher low, higher high, and lower low, meaning that price has make a market structure shift. For the ICT, we call market structure shift. SMC, they will call chain of character. Actually, it's the same meaning. You want to mark at the MSS or you want to mark at chain of character, that is okay. And then what you need to do is you just need to wait for price to pull in the PND or premium discount zone, and then you're gonna sell. That's it, right? So today I'm gonna look for the sell entry because market structure, even in H1, you look here, you're gonna see something like maybe from here, right? Higher. Oh, that is sorry, that's wrong here. Higher high, higher low, correct. Break below, pull back, maybe here or go down, or maybe here and go down. Okay, and if price can close below this one, this level we're gonna mark at break of structure. Okay, then price continue to go if they're gonna reverse lower. Okay, lower low, lower high, break, lower low, lower high, break of structure, lower low, lower high, like that. Okay, it's gonna be like that. If this is a break of structure, is a break of structure, break of structure. If they're gonna respect this level or they will go to these zones, I don't want. Okay, that should be all for today, guys. Thank you so much. I will see you guys again on next Monday for live trading section and Wednesday for the education section. Okay. All right, guys. So this is our sell zone. Okay, I mark for you guys already. Sell zone there. Okay. Bye for now, guys. Take care. Bye bye.